Hey guys, welcome back. Hope everyone had a great weekend. And let's get right into the stock market technical analysis. Everything in this video is my opinion. It's not trading advice or investing advice, so keep that in mind. Let's get going. All right, so here's what I see on the S&P 500. I'm going to just run through this relatively fast because I want to just get the points across. What I read on this is we've got, pretty broad market participation in the rally today, except for the major player, which is tech and FANG. You got to have FANG and tech rallying in order to see participation. So to me, this looks like just, people buying, the garbage stocks or the ones that are hurt the worst, and the market's rallying. But let's look into some more detail on that rally. So here's the S&P 500. You can see here, if I go to the hourly chart, there's a couple things to look for on this chart. One, the entire move today so far has been made what was dictated by the very thinly traded overnight session and the futures market. So that's something to pay attention to when the move is made by the futures market and the general market has been selling this pop so far. Kind of bottoming, chopping around a little bit, but so far there's been some selling. I mean, we're below the open today. Then that's suspect. So again, the reason why is that price can move higher, but if it's done based on extremely thin overnight futures trading, especially on a basically yesterday was a Sunday night. We had the holiday, but a lot of traders weren't there. Markets moving on futures overnight gaps is not something to be trusted. So I think that we're up near the top of where we're going to stop this bear market rally. If this is going to be a bear market rally, again, I could be wrong, but let's look at the daily here. So here's the daily. We've got resistance right there at 302. It's about 302.50, roughly in that area. And we opened today right at that resistance. So I think that's going to probably hold. They might pop it slightly. Maybe they pop it in the overnight session just briefly. But I think this is the area where this rally is going to end. The reason why is I'm seeing a lot of signs that I want to cover. But again, before I move on, I guess, from this, let's look at a couple things. One, a lot of retail traders just look at price, and that's all they see. Price. They don't look at trend lines. They don't look at volume. All they see is price. Price goes up, they're happy. Price goes down, they're sad. And that's fine, but that is not that's reacting to what the market's giving you and just not being ready for the next move, not being able to anticipate any moves. It's basically just it's letting the market toy with your emotions, basically, and you don't understand why things went against you, and you don't understand why things are going for you. Ultimately, people that trade based on price, for the most part, they're just long-term bulls. They buy stocks and they hold them for the long term, basically, and if stocks go against them, then they tell themselves that it doesn't matter because I buy for the long term, I'll dollar cost average, and I'll buy more when something's down, things like that. And that's ultimately, I think, what a lot of the mentality of those people are. One thing I want to point out is trading volume and analysis. And, for me, this is just part of my everyday analysis, but I think a lot of people maybe don't understand this. And this is what I want to point out. You've got volume declining, kind of dropping off a cliff right now, and you've got price moving up. All right, so we have declining volume and we have price moving up. Now, when I keep telling everyone that this chart to me looks bearish, the reason why is I see more than just price. If I just look at price, then fine, it's bullish. If I don't look at resistance lines and trend lines and how markets are behaving in context to the bond market and to the gold market, things like that, then fine, it's bullish. But I want to point this out here. This is from redif.com. You do a quick Google search. I just did a quick Google search on prices moving higher on decreasing volume. Now, for me, this is just kind of standard analysis, but I think I want to point it out so everyone can look. If you scroll down on this redif.com link. I'll leave a link in the description too. You'll see this chart, general rules and volume analysis. And this just gives you an idea of what the market's telling you when you see certain things lining up. Volume increasing, price rising is bullish. Okay, so if you have price rising, and especially in a breakout area, and volume is rising, that's bullish. If you have volume decreasing, price falling, well, that's bullish too. Okay, because that tells you that the selling is ending. If you have volume increasing and price falling, that's bearish. And this is what we have right here. Volume decreasing, price rising. The interpretation is that's bearish. All right, so that's what I want to point out. Volume decreasing right here, pretty easy to see. Price rising, bearish. And that's because there's no market consensus. That's what I'm telling you. People are not participating, and this is going to most likely have a high probability of failing and reversing and selling off. And that's what I want to point out. Here's what the retail traders are looking at. Stocks break through a major milestone that could signal a longer uptrend. The S&P broke above its 200-day moving average, a widely watched momentum indicator. Okay, fine. Would you expect to see volume just anemic when you're breaking through a major pivot point? This is how you read the market. This is what you have to, you have to bring in these concepts in order to be successful in understanding where the market is. And that's what I'm saying. This is what I keep trying to point out, that even though price is grinding higher, the move is for the most part being made in very thinly traded overnight futures market right here. And the market, when the market comes out and trades for the day, we have no participation on any kind of, even though we're breaking above the 200-day, there's no spikes in volume. And also we don't have tech participating. Here's your cues, moving on. And, tech is selling off. Tech basically came down and closed the gap. It's up 0.7%. And we filled the gap, and we're still selling off. It looks weak to me. It looks like looks like the move in tech might be over. And now SPY's, had kind of the final move, but no volume. And so to me, I have to read it for what I'm saying. And that's the thing. People say, oh, the trend is your friend, trade the trend. Well, that's fine. You can trade the trend. But when you start to see signs beyond just price and trend, you got to start looking for the next move. What's the move beyond the trend? Because the reality is that if you ride the trend, a lot of people, that's fine to ride the trend. If you were bullish down here and buying it, fine, ride the trend. When it ends, you'll give up some profit and that'll be it. For me, I started getting short in this area, looking for the next move. And, so I was bullish in the beginning, started getting short. So I'm looking for signs that the next move is coming. And I see it when I see things like this today, when I see, this, kind of this doji, whether that closes as a doji, when I see falling volume, I see signs that the big move is coming. And usually when that first initial move, when the trend changes, is the biggest part. It's usually a very big impulsive move. So that's all I see there. Let's move on. XLV chopping sideways, nothing going on. XLF chopping sideways. Here's your resistance, 23.61. Kind of just running sideways. Walmart looks bearish still. You had the big nice reversal candle right here, and then we're below resistance of 124. It's about 125. Just barely below it. That comes from the bearish rising wedge. If I roll out, big bearish rising wedge right here. On Walmart, what I see is a big bearish rising wedge, which sets you up for a bearish move down, and I see a false break higher, and it actually chopped it twice right there. And we've then recovered back below resistance, and we're selling off. So in general, false breakout, bearish rising wedge, bearish technicals on that one. Apple. Yeah, gapped higher, but selling off a little bit today. Only up, little less than 0.5%, kind of sideways basically. And let's look at Microsoft. Microsoft's down today. You've got the market up 600 points, or the Dow, I guess. I don't look at the Dow, but You've got that up 600 points, and Microsoft, one of the major players in the S&P 500, is down today. So that's showing relative weakness. And if you have weakness in these FANG stocks, you've got weakness in the stock market, because the market can't rally without FANG. Tesla chopping sideways, just mark these trend lines out, and then you won't, there's nothing more to talk about really on Tesla, but you've got this resistance line on the hourly chart. You can see we've just been sideways, so we'll make a decision soon. Nvidia looks like it's set up to make some sort of an island top reversal, but you got to wait for it. So here it is, 339.88. If we gap down to that level and create this island top, then that would be a reversal, and you could potentially short that thing. Until you get that gap, I think it's just a no touch, at least for me. Let's look at Zoom. This thing's playing out nicely. Short, we had the bearish rising wedge, got short at resistance right here, 176, and we're still selling off. Looks like we're heading down towards the bottom of the wedge. We're down about 5% so far from that entry, and looks like we're going to head down here another 6% or so, and then we'll see. We'll see what it wants to do, whether it holds support or breaks. All right, let's look at TVIX. All right, so same kind of deal. We're just trading right below support right here. It looks like we did hit it and kind of rejected, so we'll see. But I suspect volatility at some point today recovers this support line, or maybe tomorrow. It could easily gap higher, and that would probably come with a gap down in the general markets. But again, TVIX, you've got the support line on the hourly. You can just mark it out. We had the false breakdown right here, which we traded and ran, caught a nice gain right there. And then it's just been trading along support. Today we gapped down, but we're right there. So, excuse me. Something to watch. TVIX is going to move when the markets move. So just to kind of reiterate, Qs, you've got resistance right there at 233. It's about 233.50. Somewhere right in there, and we get that right back from this cluster right here. If we break above that, then really all-time highs are in sight, so that's possible. Obviously all-time highs are in sight right now. We're close enough, but doesn't mean we're going to get there. Again, same thing as when I was looking at this gap fill back here. I thought that we weren't going to actually gap fill, and that's what we did. We did get that move right there, but then it ran back and did gap fill. Maybe it's going to do that for the all-time highs. Make you think it's going to break to the all-time highs and just not. And it might just roll over. And possibly that might be the end of the bull market rally or bear market rally. Again, possibly is the key word. Okay, and SPY, again, 302.50. You've got, we're breaking above the 200-day, and there's absolutely no participation in that event. So that's a tell to me. I read that as bearish. Volume declining, prices up, bearish. So again, thanks guys for watching. Hit that like button, leave a comment below. Preferably a constructive comment. If you're bullish and you think I'm wrong, leave an argument for why you think that is. Do you have a technical reason, or is it just based off of what you think? I don't know. I'm trying to show you guys technicals and what I'm seeing behind the actual data. So that's really what this analysis is based on. So again, appreciate it. Thanks. Catch you on the next one.